2022 has been a crazy year for the US economy. The housing market is insane, used cars are somehow going up in value, and inflation has hit double digits. And earlier this week, the Feds announced that they are raising interest rates. So the question is, how does this affect you and what's next? What's up, you guys? Welcome back to the Financial Couch. With interest rates rising, what does that actually mean for you and your finances? Before we can dive in, you first have to understand how raising interest rates affects the economy. Quick disclaimer, I am not a financial expert, and this is just my understanding of the entire situation. If I'm missing something, feel free to comment and correct me in the comments below. With that, let's get started. So let's say interest rates are low like they have been for the past several years. This means people can go out and borrow money for cheap. For one, this encourages people to go get a house because they can get a mortgage for a very low interest rate. In addition, since people are able to borrow money for cheap, this encouraged more consumer spending, and more consumer spending leads to increased demand in the US economy. This means companies are making more revenue, which they can use to hire more people and pay their employees more, which drives down unemployment. Sounds pretty good, right? So now with consumer demand very high, we can recall from our economics class in high school that increased demand leads to companies increasing their prices. This is not necessarily a bad thing that people want to spend, as it helps stimulate the economy. However, if customers are spending too much too fast, it could lead to something that we all hate: inflation. And we all know what that means. It means that the value of the dollar is going down and that our buying power is slowly decreasing. Keep in mind, some inflation is good as it helps stimulate the economy. A healthy inflation rate is estimated to typically be around 2% per year. However, in 2022, it has peaked at over 9%, and if it keeps going up, that means that your money could be losing value faster than you're able to make it. So with all this going on, what are the Feds going to do? They're going to raise interest rates in order to help fight inflation. But how exactly do higher interest rates help fight inflation? Well, by raising interest rates, that means it's going to be a lot more difficult and a lot more expensive to borrow money because the interest rate is just going to be higher on the money you borrow. With this, less people are going to be wanting to borrow money because it's going to be a lot more expensive. In theory, because it's a lot harder to borrow money, this means people will start spending less money as well. This will eventually drive down market demand, which will bring down prices, which will help slow down inflation. This sounds great on paper, but there are consequences. For one, the housing market is going to slow down substantially because mortgages are going to be a lot more expensive. This is not really good news if you are a first-time home buyer trying to secure a good interest rate. Next, with consumers spending less, this means in turn that companies are making less in revenue as well. These companies will begin to slow down their production and begin searching for new ways in order to save money. And if that doesn't work for them, these companies could take it to the extreme and begin laying people off. And if this goes on for... Come here. Hi. Guys, my adorable little puppy decided to join us. This is Penny. Everyone say hi to Penny. And if this goes on for long enough, this is how recessions can be created. A lot of experts are claiming that by definition, we are already in a recession in July of 2022, but that's a topic for another video. The overall goal is to tweak the interest rate just enough so that way it discourages any more consumer spending, which would decrease demand and help slow down inflation. But the Feds could screw up and raise interest rates too high too fast, meaning we could see a lot of companies beginning to lose money due to less consumer spending. And once companies start letting people go, this leads to an increase in unemployment. This can only go on for so long until we are in another recession. But hopefully we won't get there. So how exactly does this affect you? Well, you could be laid off from your job if your company is losing money and they need some way to save their assets. In addition, if you are a homeowner with a variable rate mortgage, that means your monthly payments are about to get a lot more expensive because the interest on your payments just increased. And if you're a first-time home buyer, it might be very difficult because the interest rate on your mortgage is about to go up substantially. So are there any real winners in all this? Believe it or not, there are. Some ways this could benefit you is if you have money saved up in a bank. With the Feds raising interest rates, this means the interest rate you have on your checking account will also go up as well, so your money is making you more money just by sitting there in the bank. Granted, it's not a lot more money, but hey, at least it's something. The other people who will benefit from this are people with fixed rate loans. A fixed rate loan doesn't change no matter what, so they're locked in at that lower interest rate even though the Feds have increased the national interest rate, meaning you and your monthly payments have not changed at all. Overall, no matter what happens, we will all come out alive on the other side of this. There is not any point in US history where we have been in a recession and have not been able to come out of it. Of course, it took a lot of time and effort to do so, and it was a painful process, but eventually we made it through. And if that happens again here in 2022, there's no reason that we shouldn't make it out on the other end as well. Only time will tell, so the best advice I can give is just save your money and prepare for the worst. And that's just because in the world we live in today, you just never know. So it's better to be safe than sorry. That being said, thank you guys so much for watching. I hope you guys enjoyed the video. If you did, hit the like button and also hit that subscribe button down below. I'm posting a new video every single week here on this channel that you will not want to miss. Take it easy, guys, and I'll see you guys in the next video.